Yo, what's up guys? Today's video is going to be a little bit different. It's going to be kind of just an unedited video of everything. I want to mainly focus on building a strategy that works for you, because obviously I use ICT concepts, but obviously it doesn't work for everyone. I don't use a specific model. I kind of just piece together different strategies that he has brought to light, and I kind of just use those as my strategy. So to get right into it, I've been running mentorships for past couple weeks now. It's been going pretty good with some individuals. But a main question in there is kind of just drawing liquidity. What is liquidity? Where is it? I have made videos on this in the past, but just kind of a quick recap. It's pretty straightforward. On what liquidity is. So we're just going to go over it from today. Today is Friday the 26th. So we'll just go over an example from today. As you can see, this is a high right here. This would be our buy side liquidity. And then if we look down here, we can pretty much find out where our sell side would be. So pretty much any low that was formed, here's our sell side, which obviously got swept. So as far as entries for this trade, guys, today it was a little bit different. I used an inverse fair value gap for the entry, which I have not really talked about that in my fair value gap videos, which is why I kind of want to go over everything in today's video. So that's what today's video is. It's going to be building a strategy, piecing together all the videos that I've made into one. There is some things I haven't covered, like that I will be using, like standard deviation. I have not covered standard deviation yet, but it's pretty important. I use it pretty much in every trade. I haven't covered inverse fair value gaps, but it's pretty straightforward. So anyways, let's get right into it. So first off, when you're building a strategy, it comes down to these two main points. First is find the draw on liquidity. Simple, right? First, all you got to do is you got to find the draw on liquidity, and pretty much this is easy to find. People have different methods for finding draw on liquidity. A lot of people go to the daily chart, and they'll say, oh look, we closed above the previous day's candle. That means the next day we're going to be bullish. I do it a little bit different. I like to be a little more analytical in my daily biases or in my draw on liquidity. And I pretty much look at, for me personally, I look at any recent PD arrays that are being respected, whether we had a liquidity sweep on a higher time frame, we have a higher time frame fair value gap, we are breaking structure, which is kind of what I go back to that daily candle thing that a lot of people use that. But whatever works for you is great. What works for me might not work for you guys. For me personally, I like to find the draw on liquidity by looking for PD arrays, mainly fair value gaps. Mainly is what I look for is before the market opens, I look for any fair value gaps that we are holding. So I'll go down to like the 4 hour or the hourly. Like for this case, like why did I know today was going to be pretty bullish? Well, first of all, it's a Friday, and Fridays tend to be bullish. Also, we were holding this 1 hour fair value gap. So what am I waiting for? I already know the draw is higher, right? I drew this out the other night. I think in my Discord. Let me check if I posted my daily bias. I posted it for the other day. But yeah, look. Here's this hour fair value gap. We are holding this fair value gap into the morning. If we open up at, for me, it's 6:30 a.m. is when market opens. I'm in California. If market opens up and we're still holding this fair value gap, all I'm looking for is a manipulation move inside of that fair value gap for us to head higher, and vice versa, right? If there's a fair value gap here, right, a bearish fair value gap, I am waiting for price to tap into it and then do something like sweep and then dump. Same thing, vice versa. Pretty straightforward. That's draw on liquidity for me. That's how I find it. Everyone else is different. This is daily bias. This is draw on liquidity. That's how I find it. I look at the PD arrays, which are being respected, which aren't. We are holding this 1 hour fair value gap. What I'm waiting, my most high probability setup would be longs today. That's what I'm looking for. I'm waiting for either this to get swept, which it does, and then just wait for a setup. This got swept. Okay, what am I waiting for? Another internal sweep. That brings on to my next point, which is the next part of the strategy. So first you have this one. Find the draw on liquidity, right? And then what's next? After you find that, what's number 2? A liquidity sweep. Look for a liquidity sweep. Price, the algorithm of the market moves in waves. It moves in waves that hunt liquidity. So, price cannot move without a manipulation move. It has to have a manipulation move. So, what am I waiting for? A manipulation move. What do we have here? We have an external draw right here. Gets taken out. We see a move up. Nothing crazy. A lot of people are probably going long right here. Okay, you see this fair value gap? People are probably longing this like crazy, right? But it's pre-market. I don't trade that, so it kind of worked out in my favor. But what do we do get? We get an internal sweep on a lower time frame. Go down to the 1 minute, right? We get this internal sell side swept, right? And then what do we have left behind? This is where that term comes in that I haven't really talked about yet. But this is an inverse fair value gap. And I don't use them a lot, but they do have a very high success rate when they do work out. Because a lot of times, normally people are going to be placing their limit orders down here, right? You're going long. If you want to go long, you're probably going to put a long order here, right? This is what you're looking at. Good entry. But for this, it's just, it comes with market experience. I know price is not going to come down here. We already swept external sell side and we swept internal sell side. There is no reason for price to head lower. We already saw this impulse candle up and consolidation here inside of this inverse fair value gap. This is your entry. Your stop, 50% mark of the previous fair value gap. Okay, that's first. Now, if you even want more confluence, there comes part 3. Step number 3, very simple, break of structure. What does that mean? It means when you get a candle close above a previous high or a low. In this case, we close above this high that was formed. We close above it. Obviously, we close above it. There's our break of structure. Okay, and then we pull back into the inverse fair value gap. So this technically could have been your entry. Even this fair value gap. I would have said this is even a better entry. If you want more conviction in your trade, here's a better entry. Not a bad entry right there. There's your first take profit. Again, targeting areas of liquidity. Here's one. And of course, the final draw right here. Targeting areas of liquidity. So here's the trade. The EA Plus setup of today. I took it down here in the inverse. But this, I didn't even notice this until now, until I'm doing some tape reading, which is why this is good, guys. You got to. And that brings me back into the last part of the strategy. So first is find the draw. 2, look for a liquidity sweep. 3 is a break of structure. 4, fair value gap. And then obviously 5, enter. This is what you look for. This is the strategy. This is it. This is all you need. You don't need anything else. There's liquidity sweep, or I'll edit this. Or SMT. And I'll go over SMT in a separate video because I think that deserves its own video. But yeah, anyways. This is all you need. Anything else is noise. All you need is drawn liquidity, liquidity sweep or SMT, breaker structure, fair value gap, enter. That's it. Simple. If you look for that every day, I guarantee you will become profitable. If you can stick to this, if you can be patient and only trade this, only. If this is checked, check it. Here's your check mark. Where's our little shapes? Here. Check mark. Here, check. Drawn liquidity, check. Liquidity sweep, check. Breaker structure, check. Fair value gap, check. Enter, check. Let's check this off for the trade of today. Draw on liquidity. I already stated that I expect us to head higher. Okay, I expect us to head higher. Now what I'm looking for, SMT or liquidity sweep. We sweep out external, which is here. Here's our external draw, swept. Internal draw, swept. What do we get? We get a break of structure. Here's our market structure shift, right here. Here's our fair value gap. Easy. Enter. Where's our entry? 50% consequent approachment of the fair value gap. Stop loss at the previous low. Targeting external draws. Here's our first internal model. If you want to take this for a 1-3, not bad. Here's your partial, and here's your external draw, which gets taken out later. Okay? That's what I want to say. This is not complicated. All you need is those things. Find the draw. Look for a liquidity sweep. Wait for a break of structure. Enter off of the pullback or tap into the fair value gap. That's it. If that doesn't happen, you don't place an order. That's it. You go back to bed. That simple. Building good habits. It's not about making money. It's about building habits. Do you see all of those things every single day? Enter. That's it. Apply risk when your setup is there. If it's not there, don't trade. Why are you going to place trades when there's no setup? No point. You should not be, even if you make money, you should not be happy that you made money. If you're making money, not following your rules, not following a setup, you should not be happy. You do not deserve that money. That money is not yours, and it will get taken back very soon. That is something you have to understand. You should not be happy when you take a win off of nothing. FOMO. You got lucky. You gambled and you made money. No. You over leveraged. You took a quick scalp. You should not be happy. You should be more happy when you take a loss, following your rules, following your strategy, than when you're not. Don't get sucked into the making money quick. It's not how it works. Build good habits day in, day out. This setup, look how clean this is. This happens every day. Every single day something like this will happen. It is up for you to wait for it to happen. Identify it and enter. Apply risk, and that's it. The market's going to do what the market's going to do. You're just there to follow it. Okay? No matter what your bias is, no matter what it is, the market's going to do what it's going to do. Doesn't matter how good of a trader you are. You can't change the market. No matter how good you think you are, the market will always do what it's going to do. It hunts liquidity. You just got to follow it. This is literally the A+ setup. This is my model that I follow every single day, day in and day out. This is my profitability strategy. That's it. Find the draw on liquidity, wait for a liquidity sweep, wait for a break of structure, enter for a fair value gap. If none of all of those are not met, you do not enter. Check the daily, check the 4 hour, check the 1 hour, 30 minute, 15 minute, 5 minute, 3 minute, 1 minute, check everything. If all of those things are not met, you do not enter. It's that simple. That's how you lower the amount of losses you take and heighten your wins. That's it. Only trade your setup. I don't care if you make money off of, oh, price is moving down really quickly, I'm just going to take shorts here and hope I make some money too. No. I don't care if you make money. You should not be happy that you made money off of trading random noise. If you are not trading if you're trading something other than your setup and you make money, you should not be happy. You're creating bad habits, and that will lead to a road of unprofitability. To create a road of profitability, you have to stick to your habits day in and day out, no matter what. There's not a day, today I'm just going to take, no. There's no days off. There's nothing. Create good habits, stick to them. That's how you become profitable. It's so simple. Look how clean this chart is. There's no whatever. There's no nothing. It's just a clean, empty chart. Liquidity sweep, impulse move up, fair value gap, enter. Targeting internal draw, external draw. There's your partials. Internal, external. Those are your partials. Take profit 1, take profit 2. Super straightforward. This is your buy side. Super straightforward. Look how clean this chart is. Liquidity sweep. Impulse move up. Broke structure. Left behind a fair value gap. Held the fair value gap. Broke out of the fair value gap. Take one. Take profit one. Take profit two. Does not get much cleaner than this. This is what you have to see day in and day out. That's what happened. Wait till it happens and take it. This happened pretty early on the day. This entry was like 15 minutes into market open. Okay. And I closed it. This was what, like an hour and a half later, my last position. That's it. That's all you got to do. Day in and day out. Here's a nice entry too. We just swept. Anyways. Super simple. Super, super simple. Everyone's trying to overcomplicate it. You don't have to overcomplicate. This is all you need. Find the draw. Wait for a liquidity sweep. Wait for a break of structure. Enter off of the fair value gap. And I guarantee you have at least an 80% win rate. If you do that, legitimately, if you stick to that, all of those criteria are met, you will have a minimum 80% win rate. If all those criteria are met, minimum 80% win rate with high risk to rewards. This trade, stop loss right there. First take profit is a 1 to 3.6. Okay, you can take off your full position there and have a good day. That's a good trade. Last take profit is a 1 to 9. Okay, that's where you're taking off everything. A 1 to 9. Okay, highly profitable with an 80% win rate. Manage your risk. Stick to your setup. Simple as that. I'm going to leave it at that. This video is kind of short because it's a super simple concept. This is just everything put together. I will make another video on standard deviations and inverse fair value gaps because I think they're pretty important. But with that being said, just create good habits. Don't worry about the money. Trust me. Anyone can become profitable. Just don't worry about the money. Every day you should be getting dopamine from creating good habits. Being like, yes, bro, I stuck to my plan today. You know what? I took a loss, but I stuck to my plan. I lost 0.5%. I stuck to my plan. It was an A+ setup. I know tomorrow I'll be profitable. Or I know during this week I'll be profitable. Or the monthly I'll be profitable. Or yearly I'm profitable. Don't focus too much on the day-to-day. Trading is so much more than day-to-day. It's monthly and yearly. The day-to-day does not matter. If you have an 80% win rate, who cares if you take a loss in one day? Step away from the charts, go to the gym, do what you need to do, come back, look at the chart, see what you did, see what you could have done better, journal it. Journaling is important. Just keep it to the basics, guys. With that, this is the end for this video. Tomorrow I want to upload standard deviation. I'm also editing a TikTok video right now, which is going to be, we'll see how it goes. It's kind of I did a bad job at vlogging my recent trip. I'm not going to lie. I recorded like maybe 10% of what I was doing because I'm too in the moment, you know, but I'll get better at it. But with that being said, hope you guys enjoyed this video and get some value out of it. And peace.